Live from the Real Asset Queen studios in Kalispell, Montana, this is the Real Asset Queen Live, the one and only show about connecting people, process, and money. Each week, you'll hear mind-blowing interviews from top industry thought leaders, as well as actionable tips and strategies that you can implement in your finances, business, or investing life. Please welcome your host, a former healthcare executive turned entrepreneur, investor, and efficiency expert, Michelle Kimbrough.
Hey everyone, welcome to the Real Asset Queen. We are excited to be back for the new year, and we are on episode 29, and we have a very special guest with us today. We have Don Spafford, and he is a RV park pro, and we're going to learn all the secrets and the ins and outs and everything in between of investing in RV parks. And I do believe his tagline is invest where you play, and I absolutely love that. So some disclaimers: we're not financial advisors, accountants, anything else. So whatever you hear on the show, please take back to the appropriate person and make sure that it fits your particular financial situation. So welcome, Don. Thank you so much for joining us. I know we had this scheduled last year, but life happens, right?
Yeah, for sure. Yeah, thanks, Michelle. I'm glad to be here, whether it be now or later or in the past. It doesn't matter. As long as we're here to share this great information with your audience, that's all that really matters.
That's awesome. So, Don, you've got quite the background. You've got a finance background, a little bit of an educational background. You started dipping your toes in real estate investing, I believe, in 2017. And then you parlayed that into syndications and into the RV parks. So, tell us a little bit about your background and your journey, because I always find it interesting. I think everybody starts out investing with buying single family homes, and then they realize that this is taking too long. It's too much work. There's got to be something better out there. So talk to us a little bit about your background.
Sure. Yeah, thanks. So, my educational background, as you stated, is around finance. In fact, I have, I think it's 4 majors: banking, finance, investment science, portfolio management, and accounting. So my initial goal was to get those degrees and study for the CFA exam and become a financial advisor or portfolio manager, something along the lines of stock investing and advising. And then when the 2008 market crash happened, and I saw these big name companies going out of business and laying people off, I kind of had a change of heart. I realized that industry may not have been as secure as I thought it was, and I would feel horrible if I was, even though not technically my fault, responsible, say, but if people are entrusting their money with me to invest it wisely, and things that are out of my control can wipe away their retirement savings, that would just destroy me. So I decided that's not for me, so I've been, my we'll say professional career, I've been working in that industry for almost 20 years with a firm that does back office support for investment advisors. So I'm still somewhat involved. It's not directly involved with managing people's money. Around, because of all those things happening, I still understood that, as I've been for many years a big follower of Warren Buffett and other people in that space, and they always talk about finding ways to create money while you sleep, or you're going to work till you die. And so I was trying to figure out how to do that. I was investing in stocks, but really, honestly, stocks don't really provide much actual income. It's more of a very, very long-term play for most cases. You can do some day trading and short-term stuff if you really are that, if you're able to take the risk. But I did not have the capital to really invest, hundreds of thousands or millions to really get a large enough amount invested to get a good dividend from that. So I did not see a real future in that. And so around 2010 or 11, I guess, my wife became a realtor. And some of her very first clients were investors. And that's really where my mind started to, be curious about investing in real estate. I saw this as a potential better option to do that, but I did not yet understand it, I guess, enough that as probably most people feel the same. I always thought it was, this is a rich man's playground, right? You have to have a large amount of wealth to invest in real estate. It's not like, buying a couple $100 of stocks here and there. It's you need a large amount of money. And so I started researching and learning, reading books, and came to realize that may not be the case, right? I can get into real estate possibly with very low money down, or in some cases zero money down. I just had to find the ways to make that happen. So had to get creative. Now for me, so I, as you mentioned, I started investing in real estate in 2017, pretty much right when I turned 40 years old. I was, much later to the game than I would have liked to be, but it's better late than never. And so for me, as you mentioned, the single family homes, I saw single family homes as too risky. I did not want to have a property and have it be vacant for a time and have to pay the mortgage, or have to, I say, replace all the carpets and things, and have all that income wiped away. So yeah, there's potential to have a big amount of equity on the back end possibly, but that still to me was still risky. I was not buying for the long-term equity. I was buying for the cash flow. I wanted to have income to replace my W-2 income, so I could leave my job sooner if I wanted to. So that was my goal when I started investing. And then my first property I bought was a fourplex, because I understood the number of doors made a difference. I saw a higher number of doors as less risky. I was not probably in a position to buy a commercial property yet. So the most number of doors I could get on a residential loan is a fourplex, 4 units. So I determined this to be, okay, it's not likely that all 4 doors are going to be vacant at the same time. Most likely 1, maybe maximum 2. So as long as the other 2 are there, that should at least cover most, if not all, of the mortgage. So I can at least reduce that risk for me. And so again, with that, I had to get creative. I did not have a large savings. So what I did actually is I borrowed for my 401k. I took a loan from my 401k to pay most of that down payment. And I found a local lender that does a 10% down payment on investment property. So I did not come with 20 or 25% down, which is 10%. I found this property actually off market. And so I put $26,000 down on this fourplex to buy it in 2017. About a year ago, I refinanced that property, pulled out over $100,000 in cash that I have now reinvested in other things, and the mortgage payment, because of a lower interest rate now, or at least at that time, the payment is about the same. So my cash flow did not really go down at all. I'm still that property now still cash flows about $1,200 a month. But I pulled out all the money I've invested into it, so it's now an infinite return on that property basically. Again, I've reinvested that into other things, which is now multiplying that wealth as well. So I saw, and I can now specifically talk about myself from my own personal experience that you can really quickly, I say quickly, it's several years, 5 years or so, you can build wealth and income much faster in real estate than you can really with anything else, honestly, especially starting with very little money or no money. I just the end of this last year, end of 2022, I actually left my W-2, so now I'm full-time real estate investing as well. So I did meet that goal when I bought that first property. I wanted to be able to, say, retire from my job within about 5 years. So that's about 5.5 years when I actually closed that property. So it's close enough for me that I can say I met that goal, and I made it happen through real estate. And the details of everything that led to where I'm at today. But yeah, when I bought that first fourplex, I had no plans or intentions to be doing what I'm doing today. That just kind of, I don't know if we call it a natural course, but a series of events occurred that led me to this point where I'm at today. And I tried to seize on those opportunities when they came up. Luckily it's worked out for me.
That's awesome. And that's a textbook play, right? And I agree with you on single family. It's way too risky. But textbook play on refi and now infinite returns on that initial property and how you redeployed that capital into other cash flowing assets. So congratulations on leaving your W-2. Another person has broken the chains in the rat race. So that's wonderful.
Thanks.
Yeah. So tell us a fun fact about you that nobody may know.
Fun fact. Well, I don't know how fun it is really. I mean, I saw you from my introduction. You put on there that I speak Spanish. That's not really a fun fact. People now know that already. So yeah, I am fluent in Spanish. I actually lived in Argentina for 2 years. My wife is from Paraguay, so we speak Spanish at home. But fun fact, I guess, would be aside from that, which you probably wouldn't have otherwise guessed, I'm fluent in Spanish. I actually once had a Spanish translation business as well. But I am I don't call it avid, but I enjoy coin collecting. I have a pretty massive collection of coins and banknotes from around the world. I don't just focus on U.S. only, but a world collection, and I enjoy that quite a bit. It's one of those things that I don't really do anything with it, like, something that you play with or whatever, but it gives me some satisfaction just to fill in those holes and complete sets and acquire new coins and things for the collection. So that's something I enjoy.
That's awesome. Yeah, I like collecting coins and notes from around the world too. I like the different colors of the
Yeah,
money around the world. There's some beautiful notes. I mean, just
exactly. Yeah.
beautiful notes. And I did stamp collecting for a while, but that didn't go too far. I
Yeah,
like the
yeah.
coins.
I did that as well when I was younger, but yeah, I don't really do anything with stamps anymore. But yeah, coins and banknotes, like you said, that was pretty much when I started collecting. Really, it wasn't about buying for value or really anything. It was more of like, I think this looks beautiful. This is a pretty awesome design. I want that in my collection. So that's what was my purpose for buying initially. I mean, obviously that now it's actually quite a massive collection. I've several years ago went back and tried to put a value to everything based off the books that are out there for valuation and things, and it's worth quite a bit more than I would imagined. And so it's one of those things I hang on to. It's like, if we ever have a serious emergency and we have nothing else, hey, I could sell it if I had to, but I prefer to pass on to my children one day and help them continue it and have it as something of value for them.
That's awesome. That's awesome. Thank you for sharing all of that. So we're going to talk about RV parks today, not mobile home parks,
Right.
but RV parks, and it's more on the recreational side of
Exactly.
investing, right? So talk to us a little bit about why RV parks and how is that potentially a better investment than, say, mobile home or multifamily or self-storage?
Yeah. Well, thanks for making that distinction first, because people do get that confusion and think, RV park, you think mobile home park. I don't even actually use the term RV park myself. I say RV resorts or campgrounds, just to have people have a different picture in their mind when they first imagine it. But yeah, we are more on that recreational side. So these are like vacation resorts, really. So our customers that are clients, people that come to stay at the properties are not tenants. They don't live there. It's not their home. We don't have leases or contracts or worry about evictions. So people are coming here to have a good time, create memories, and have great experiences, and they go home. So why are we in this space? It's a long list, I guess. But what initially, I'll speak of me personally. What initially drew me to this space was a couple years ago, I guess, and I was looking for higher cash flow returns, looking for better cash flowing commercial properties. I was primarily focused on multifamily. I was looking to apartment buildings, and I was not finding anything that I guess got my attention as far as the returns they were offering. And I heard about RV campgrounds on a different podcast through somebody else that was in it, and so kind of that piqued my interest because the returns they described were very enticing. And so once I got into it and learned more about it, went through different webinars and meetups like this one just to hear from people talking about it and learning about it, I discovered the huge opportunities that are here. And so that's what initially drew me to it. So that's one of the things that we can offer is very high cash flows. The properties that we purchase with this, we'll say this transient vacation type resort campground, our average property that we target is about a 15% cash on cash. That's average. We have had some that are much higher and some that are a little lower, but on average, that's where we target. If it doesn't even meet that criteria, we don't even look at the property. So that's one thing is the great cash flows. Second of all, like I mentioned, we don't have to worry about evictions. I've had a few properties myself in other states that during the pandemic, we had some tenants that did not pay rent for almost a year, and we could not evict them because it was those laws and regulations that were out of our control. You can't do anything about it. So was not a good experience for me. I'm sure there's many others have had a similar experience that it's just it was unfortunate the way that worked out. But so with this type of property, we don't have to worry about that. Our people that are staying there, they prepay to come there. They have a good time and they have a home to go back to. If by chance something were to happen that somebody did not leave when they're supposed to leave, it's pretty simple. We just call the police and have them escorted off for trespassing. It's not a big legal issue to go through months in the courts and all that stuff. So it's much nicer. But in most cases, that doesn't. It's not like they happen anyway. People are they leave and they respect the property, and our client base, I guess, is a different type of mentality of people than let's say your standard low income renters or something. So those are a couple reasons. For some cases, what's also great about these properties is those that are looking for high depreciation to offset their other income. These properties tend to offer very high depreciation as compared to some other asset classes. We do cost segregation studies on these properties, and it's going to vary a little bit by property and what's all there. But you wouldn't even initially you'd probably think there's not much depreciation because mostly just land, very few buildings and whatnot. But even though that is true, that is the case, there is a lot of infrastructure in there. So besides the buildings, you've got all the roads, all these utility connections, pedestals at each site. All those things add up and can actually produce very high depreciation as opposed to just a large building. So that aspect is there for those that are looking for that as well. But the thing that I'd say I like about it most is kind of like what you mentioned too, the invest where you play, right? So if you are somebody that already enjoys being outdoors, you enjoy going camping, you have an RV, you are already using these properties, you already understand the lifestyle. So why not invest in something that you use and you have fun with? That's I think for me the key difference between this and any other asset class is you can actually go there, create experiences, create memories with your friends and family, something you don't typically do with other investment properties.
Yeah, I love that. Thank you for sharing that. And that does set it aside from other things. And I love the idea of not having renters that may have ran into a situation, and now you have court and legal proceedings. The 2 a.m. phone calls from the police or fire department because something happened at your building, the broken toilet, the flood on the third story, all these other things. So I like what you said, and it's an amazing opportunity. So let's talk a little bit about how do you add value in an RV resort, right? So
Mhm.
when I think about adding value and I'm looking at a multi-family property or a self-storage property, I'm looking at, are there additional revenue streams? What else can we do that, the tenants would like? Some things would be, laundry, playground, gym, things like that. If it's
Yeah.
self-storage and there's some adjacent property that's attached, can you expand and, offer, maybe, RV parking, storage, boat storage, parking, things like that. So
Yeah.
when you approach an RV resort, how are you looking at it to find value that you can add?
Sure. Yeah. Thanks for that. Any property we acquire, we're looking for value add opportunities, and there are several. Some of the very basics, first of all, is just the visibility online. Most of these properties we are buying from, we'll say, mom and pop owners that may have been in their family for generations. So they try to keep them simple. In most cases, they live on the property already, so they are self-managing it, and so they try to not make their life too complicated. So for one thing we can do is therefore come with a good website to get online presence, include online reservations with dynamic pricing, which means basically kind of similar to what hotels do as weekends or as they get more filled up, those remaining spots go up in price to really maximize the income on it. We look for opportunities where we can expand. In most cases, there's additional acreages they're either already on the property or we can purchase next door, and we will add on more RV pads, cabins, other glamping options. So that would be a huge revenue driver by just having more spaces for people to come to. We can also, again, some of these things that the mom and pop simplicity of things, they tend to just cover the utilities themselves. So we can do chargebacks on the utility uses when people come and plug in an RV. In particular, if you think about now, there's more electric vehicles coming through, electric trucks or even electric RVs. Those are going to suck up more energy in one night than most others would use the whole week. So we need to charge back those energy consumption usages. So that's right there a big revenue driver as well. Yeah. There's the very, I guess we'll say, unique thing about campgrounds is you can get very creative with it. With like I said, with multifamily, you're kind of limited on what you can really do. You spruce up the outside a little bit, add some landscaping, maybe repaint, put in new appliances and whatnot in the units. But that's really about it. You can't really do a whole lot more besides what's already there. In the case of campgrounds, we have lots of different opportunities and upside potential. So we look for other amenities we can add on. If there's not, like say, an existing like a building to use for events, for example. Most cases there already is one, but if not, we can put one for, like say, corporate getaways or wedding receptions, different things like that where people would use a big venue. There's in many cases there's restaurants on site. We don't prefer to manage these restaurants ourselves, but we rent out the building to a local business that wants to run the restaurant there. There are cases where we have a water feature, like a lake or a river, for example. We can, if not existing already, we'll build on a boat dock to have boat slips for boat rentals. People pay to store their boat there to have a spot. We can add on an aqua park, so people will come to pay. It's kind of like a bouncy house kind of thing on water, right? With all those features. So something in some cases, of course, you'd probably pay to use that, but it's also a reason to get people to come there. So people that may not be coming for camping per se, they want to come out and have a weekend to go have fun. Just go out and play on the lake, go boat riding, skiing, maybe do some horseback riding, ATVs, all these different things that are possible to do on the property. People come out there for those events, even just for a single day, just to get out and go have fun and then go back home, even if they don't stay on the property. But we do have cabins and glamping options for people that are looking to stay that don't have an RV or a tent even. So that's something else is we do to add values, add on those cabins or glamping options, tiny homes, things like that will give people an opportunity to have a place to stay. Man, like I said, there's almost unlimited upside potential. Anything you can really think of that would make sense to do there, you can do. We've even had a case where we just simply bought some paddle boards, put some paddle boards there on the water. People would pay to rent these paddle boards, and they pretty much pay for themselves within a month or two, and then it's pure revenue and profit after that. So yeah, there's lots of different potentials, things you can do to these properties, which makes it really very fun and unique.
Yeah. What's the most unique or funnest value added asset that you've put in a park?
I'd say maybe the two things I'm thinking of. On a property we closed on last May, we just for the timing of the season, I guess we put in a haunted house attraction. So it was actually very well done, and it brought in big crowds of people during that time around Halloween. So that was actually turned out much more profitable than we would have imagined, honestly, for the crowds that came out for it. But also on that same property, we are in process to build an amphitheater to do weekend or summer concert events. So we put on concerts at these properties as well to, again, draw in crowds that come there for those types of activities. And while they're there, they'll spend money on other things. So it's all about the experience. We're trying to provide experiences for people to come and enjoy the property.
That's amazing. I wouldn't have thought of a haunted house, but that's brilliant. Absolutely brilliant. So I think you touched on, the different streams of income that you can generate from an RV resort, and obviously it's limitless. I don't think I would put a haunted house in a self-storage development or a multi-family development, but RV resort makes sense, right? So if somebody wanted to get started investing in RV resorts, what are the top 3 or 5 things that people could do to educate themselves or get connected with you or somebody else to learn more about the opportunities?
Sure. Well, number one, like as you mentioned, you need to connect with people that are in that space. Like connect with me or follow others that are doing it as well. Just to follow and learn. Go to webinars, different meetup events, or people that are talking about it to learn. That's exactly what I did. I went to these webinar presentations and meetup events that are people in that space and learned from them. And so would be, I'd say, the number one advice is to do that, because obviously you're not going to learn about it from someone that doesn't know about it, right? I can't talk to a self-storage expert or a mobile home expert to ask about RV campgrounds, because it's not the same thing. Number 2, I'd say is maybe start looking at properties, start underwriting them. Exactly what I did with, again, when I started investing in real estate in general, even the fourplexes, I started analyzing, running analysis and checking on values all the time, just to understand it better and understand the numbers better. RV resorts are a bit more complex because it's not simple, just flatline rent and expenses. You have several line items of income and different types of income. Your nightly and weekly and seasonal renters, but just in general, you get a rough idea of how to understand the underwriting of it. 3, I guess I would say is, if you're very serious about it, we actually, through our website, happycampercapital.com, we offer a course that's available for people that want to learn about how to find, analyze, finance a campground. So we offer that course for people that are really want to dig into it and understand how to do it or go do it on their own. That option is there available as well. But if you prefer just to be a passive investor and not have to worry about managing it and finding it and all those things yourself, obviously you can connect with me and our website to learn how to invest with us passively, to get involved and enjoy those opportunities. Something, again, we highly encourage our investors to go to these campsites and enjoy them. So we actually offer for our investors up to a 1 week free stay per year at any of our campsites. And a 20% discount beyond that throughout the rest of the year. So we want our investors to go there and enjoy it. Most of our investors have probably never set foot on a campsite before. They come to us because they're looking at the great returns and the tax benefits and everything, but they've never once been on a campground. So those that have, they understand how these properties produce such high income, and so we want our investors to have that experience to see it firsthand and understand how it works and why they produce such high income.
That's amazing. And we'll share the website again in a little bit, but Don's information is scrolling on the banner if you're interested in the course that we're connecting with Happy Camper Capital to learn more how you can passively invest with them. But a couple questions. So where is the most popular place to have an RV resort? As far as a state, I guess a state.
Well, man, as far as a state, probably I'd say Florida is probably the biggest destination place because it's so many things to do around there. Obviously, you got all these different amusement parks and things that are attractions that bring people there. The weather, the beaches. So there are lots of campgrounds in Florida. Lots of ones being newly developed there as well. So I'd say probably if you're talking about specific states, that's probably the most popular state for one. The RV parks, right? The long term, they're kind of more similar to mobile home parks. Those are kind of a lot in the southern warm states like Texas, Arizona. You'll see a lot of those long term stay. I'm calling them campgrounds. Those are RV parks, but again, those are not the properties that we pursue. But if that's the style you would like, to have that kind of more stable long term renters to not worry about it, those are in probably those states. So you find more of those. They don't produce as much high of income as we get in these types of resorts, but they're still good properties anyway. If that's your style.
Yeah. What do they call those? Snowbirds?
Yeah, you get some of those that are they go down for winter and stay there and go somewhere else in summer. But yeah, you get a lot of those too. But just in general, a lot of long-term people that just live there. That's their home, basically like a mobile home park, really. A lot of those like the oil workers and people that are doing other industries that are outdoors that need looking for a cheap place to stay.
Yeah. Oh, yeah. That makes a lot of sense. So another question: what about inflation and where we're headed?
Yeah.
In the economy. How do you think those items might impact this particular investment?
Yeah. Honestly, this might seem counterintuitive to most people when you think about investment properties and things for recessions and inflation and things, but honestly, we expect that to increase the occupancy and the desirability of these properties. And there's two aspects of that. So I actually just had a phone call last night with a doctor talking about other doctors and some of his clients that are very high net worth individuals that have bought very high expensive RVs recently, like $500,000 RVs. So we've got I'm going to look at this from two different perspectives. So you got on one hand this upper end of people, these very high income individuals that they have these expensive RVs or motorhomes that are sitting in their driveway or they're paying to store them somewhere. They're probably going to want to use those. They don't want to just have that luxury item investment sitting there and not using it. So they're still going to get out and use it. They're not going to be affected by the recession. It doesn't affect their income really at all. They're still going to spend and do those things. So on that aspect of it, our campgrounds will still be used by those people without any problem at all. In fact, probably more so because again they want to use it. And then on the other end, maybe our lower income individuals that still enjoy camping, they may have a small trailer or maybe nothing at all. But they want to save on gas from not taking a long trip somewhere else. Don't want to pay the high prices to go like this, say Disney World or something that's going to cost them thousands of dollars. They'll do more of like a staycation place, something nearby that they can go and have fun with without spending a whole lot of money. And then again, those that do have RVs, whatever, they don't want to do a cross country trip and spend a lot of money in gas just to get there. The properties we specifically look for and purchase are within about a 2-hour drive of a major metropolitan city. So we get all that let's say built-in user base that are going to go out again and looking for a place to go have fun, go to a concert, go to have fun in the lake or do something for a weekend. Those people are going to be more gravitated to these properties for those reasons. They don't want to go far away or spend a lot on gas or spend at a high-priced resort hotel somewhere. So that's going to attract a lot more people to stay nearby and come to these properties. So the way I see it is when a recession gets worse, these properties are probably going to get even more active because people are looking for cheaper, close options they can do and still enjoy themselves and have a good time. Maybe take a shorter vacation than normal, but still get out and have fun and go back home. So I don't think, honestly, it's going to affect us in a negative way at all, if any.
Yeah, and that really does make a lot of sense because you do have people, even in a recession, that they do want to get away and they do want to take vacations. And, maybe they don't want to pay for airfare to go over to Europe and hotel and a rental car and eating out every day. So I could see where this would be attractive to people, especially with all the amenities that you offer. It's different than just going to a state ran campground where you pop up a tent and you got a fire pit and a picnic table. So you have a lot of other attractions that would be valuable for people, especially if they have families.
Exactly. Yes.
Yeah, no, that's great. Well, hey, thanks so much for jumping on with me. And I'm glad that we were able to get this scheduled and done going into the new year. I believe you do have an investment opportunity that will be coming up shortly that you're going to have a webinar. So do you want to tell people outside of your email where they can connect with you and find more information about that?
Yeah, definitely. You can obviously find me on social media. I'm very active on LinkedIn and Facebook, so you can find me there. Search for my name. But next Tuesday, the 17th, we have a live webinar where we will be talking about a 506c fund that we started. So this is for accredited investors only, but all are welcome to still come in and listen and join again just to learn more about the space. Like we were talking about earlier, this is a great opportunity to come and learn and see what we're doing and understand this niche. For later on, we do have other maybe non-accredited 506b opportunities. You'll be more aware of about the property and how to understand it. But yeah, next Tuesday we have a live event. You can find it on our website, happycampercapital.com, or contact me directly, and I'll be happy to share you the registration link for that. It's something we plan to do every month at a different time going forward to talk about this fund. We already have one property that we closed on near mid-December. That's in this fund. We do plan to close in other properties in as well. So there'll be several properties within this fund. It offers very great returns for those who are looking for, something that's more recession resistant, we'll say, and offer higher returns than you're seeing in other asset classes right now with very different types of risks. So all are welcome to come and join and listen in and learn more about it. Then feel free to contact me and schedule time to talk more.
That's awesome. Thanks so much. Yeah, I think, as the investor sentiment on multifamily is kind of cooling a little bit, people are looking for alternative assets to invest in. And this is perfect timing that we did this, to, bring awareness that this exists and to how they can get involved if they so choose. So thanks so much for your time, Don, and coming on. And I look forward to hearing more.
Thank you. My pleasure.
All right. Bye.